Welcome back, investors, to the Investing with Our YouTube channel for another video. If you're new to the channel, I am a UK-based investor focusing mainly on US stocks, and I started the portfolio I will be showing you today in April 2021. I am fortunate enough to have gone past the golden milestone having a 100k portfolio, and I'll be showing you the ups and possibly more importantly the downs of my investing journey. This includes the buys, the sales, and the dividend income I receive. So if you're a returning viewer, smash that like button. If you're new to the channel, subscribe so you can follow my journey. Now, let's get into it. Today's video is going to be summarizing the third week of November, and again, another tough one. So we ended last week at £130,026, and we end this week at £127,555 for a £3,500 loss, which equates to minus 2.7%. At one point, we were even lower than that, and we were down almost £6,000. So the bleed has been quite strong. So about a month ago, we were on about 140k, and now we're at £127,000. So this is the biggest bleed that my portfolio has seen since the portfolio started in April 2021. It's not ideal, but I understand it's part of the game. We know that pullbacks happen, and it's not something I'm too overly worried about. Now, one of the big things that occurred last week was on Wednesday, Nvidia reported its earnings. Now, this was a huge deal because it's the biggest company in the world. It accounts for about 8% of the S&P 500. So it doing well or badly has huge consequences on the market. And luckily, it exceeded expectations in terms of its earnings. It smashed both its revenue and earnings per share, and it also gave very strong guidance for the next quarter. Again, this was really important for the market because if Nvidia did not beat on earnings, then the market would have really crashed even further than you're seeing now, which I know to some people it might not seem possible, but it is. And if we look at Nvidia's share price after the earnings, it popped, but it then fell again. Now, some people are saying, and I tend to agree with that, is that the market is selling off to put pressure on the Fed to cut rates. Now, the Fed chairman, Jerome Powell, generally likes to look at data before he makes decisions like rate cuts. And as you might be aware, there was a government shutdown where no data came out. And on that basis, the likelihood of a rate cut really reduced to around 40% because Powell does not have the data to cut. Now, what some people are saying, again, I seem to agree with, is that the market is selling off to put pressure on the rate cut to occur. And it seems to have worked because if you look at the probability of the rate cut, that has moved from about 40% on Wednesday to about 71% by Friday. Now, this is a huge move, and now it looks like the rate cut is now again on the table. And if you look at the market on this news, it bounced up. Now, ordinarily, you would say this is enough. With a second rate cut coming in, that markets would continue to bounce. That would be the normal analysis of two rate cuts happening so close to each other. But in these current times, the market itself is reacting quite unusually and irrationally. So I don't know, but this is a bullish sign that one of the important parameters of another rate cut is now again on the table. Now, either way, I saw this dip as too hard to resist, and I wasn't intending to make another purchase, but the drops were too deep and the discounts were too good for me to resist. So I added another £1,000 into my pie, and I bought the following stocks. Here you go. Have a quick look. There you go. So hopefully we now see a bounce and it stays there, and we see a recovery of the market and heading to the usual Christmas rally that the stock market sees. And that takes me to just under £100,000 invested here. As you can see, very close, and I've almost completed my ISA. So I will have to wait until April before I start depositing again. But even then, what I will be doing is I will be trimming some profits after the next run, which hopefully starts now. If not, it will start a little bit later with the rate cut coming in January as well. So I intend to trim some profits and then reallocate when future dips occur. Now, if you want to see what I do invest in and I do trim, then I make updates on my Substack and you can follow it here. And while you're here right now, if you're enjoying the clarity on my portfolio and following my journey, then please, if you can, hit that like button, subscribe for future videos and updates, and hopefully we see a full recovery onto my goal of getting to 500k in my portfolio. Now, as you can imagine, with a week where we were down 2.7%, most of the positions will be red, and this is what you're seeing, with the worst ones being BMNR, Grab, IREN, surprisingly Microsoft, and also Nvidia ended the week 5% down, which was unusual considering it smashed its earnings. So again, I think some of this red is rational. You can't have Nvidia absolutely beating earnings expectations, guiding above the street's expectations for the next quarter, and it drops 5%. So these are good times to buy, in my opinion. But this is the third week we are down. I haven't seen this before. Normally, my portfolio is quite solid and strong, and as you can see, in normal situations, it's generally green. But again, as investors, we just have to get through these kind of periods. Worst case, do nothing, and best case, if you can, if you do have any money left available, then keep buying these dips. Now, just a quick look at the portfolio itself. Google, again, the star performer, up almost 80%. And even with the market sell-off, stayed above $300. And even though I've trimmed quite a lot of profits, it is still getting close to the 20k mark. So fantastic performer right there. Overall, still a lot of green. Robinhood went in the red, which is unfortunate, but generational company, this one. If you can, I added during these dips, and if I had more money, I would as well. The reason why I added to the pie instead of individual companies, I just thought the whole market went down and I couldn't pick one particular one because there's so many good options out there. So I just thought I'd add overall to my pie, and then that will be the best outcome. Meta almost break even. Imperial Brands, now this is another one of the companies that did well during the week, and this company kind of does well when there is volatility within the market. It's already a big position of mine, over £8,000. So this is one that's providing some solidity within my portfolio, and so is Visa and MasterCard, which I expect to have a little run after the Christmas period where people do spend a lot, and Visa and MasterCard generally do well during those periods. Microsoft up 22%, Nvidia up 65%, even though there was a drawdown. But at least for the next quarter, they're going to guide well. So this is still a buy opportunity for me. Carnival up 75%, Broadcom up 78%, Tesla also in the green, actually probably one of the best performers within my portfolio right now. And then we see the first red. Even in this market, this is the first red. So as you can see, the portfolio is quite solid. Down 6%. Hopefully we'll see clarity on healthcare and this will bounce back. Amazon up almost 18%. Oscar down 15%. IREN down 33% because Bitcoin is having a bit of a tough time. But again, when Bitcoin does recover, which it will do in a lower rate environment, then this one will push up as well. Grab down 15%. Centrica up 46%. This one's quite stable as well. HIMS down almost 40%. BMNR with Ethereum struggling at the moment, down 50%. So this is a big drawdown. But again, I have faith in the markets recovering. So just going to hold that for now. Costco up 13%. Apple up almost 40%. ASML and KLA, smaller positions of mine, but still doing really well. So that's it. That's the overall update. As you can see, if you look at the max returns, we're still up almost £28,000 for a 61% return. And yeah, we're weathering the storm, and hopefully there will be good times again going forward. Thank you very much for watching, and I'll see you on the next video.